The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the charts, let's take a look at what traders are watching just briefly out there. Wall Street clocking one of its best days in history on Wednesday after President Trump announced a 90-day pause on tariffs and cut levies on many countries, triggering a wave of relief that will add trillions of dollars of lost value back to stocks. And the US and Vietnam have agreed to launch negotiations for a trade agreement, the Vietnamese government saying hours after the US paused those tariffs on particularly Vietnam, which was facing 46% tariffs. And China says it's willing to work with trading partners, including ASEAN countries, to strengthen communication and coordination. All right, well, let's get into the technicals now with Peter Pan joining us from ACY Securities. Peter, welcome back. Lots to watch, of course, on markets at the moment. Let's get straight to it with the Nasdaq. Some outsized moves. What have you seen?
Okay, so to start the trade, I want to explain why Trump is delayed the tariff. The reason actually is pretty forward because those tariffs were never really meant to be implemented. It's more like a bluff, a way to gain leverage during negotiations. The most important part is the way the tariff rate was calculated was completely irrational, or let's say ridiculous. It is based on just two numbers, like total imports and exports between the US and another country. It doesn't consider what the goods was traded, whether there is existing trade barriers. So the higher the trade deficit, the higher the tariff rate, which is actually it's like the Trump's usual policy style, very big, very simple, and meant to create headlines. But the result is bad. It has create some divisions inside the US itself. We have recently heard that the Senate, which is Republicans controlled, has passed a proposal to block tariff on Canada goods. And Elon Musk comes out to publicly against that tariff plan. And even there is rumors that the Treasury Secretary Bessent might quit the White House because of the tariff, which all combined create a lot of pressure on Trump from both inside and outside the country. And in the end, he has backed off. So that move has actually taken a lot of pressure in the stock market of the global market, and at least in the short term. So our view is very clear. In the next few weeks, we expected this rebound to be continued. So the stock market, no matter what market it is in, especially in the United States or even in the Australia, the stock market looks set to keep climbing. And the tech giants in the United States, which took a biggest hit recently, might actually lead the recovery. And at the same time, those commodities like copper or oil will see some upside. We are also bullish on Aussie and Kiwi dollars. The only thing we are looking to short is Japanese yen, which has previously benefited from all the market flare. So let's come back to Nasdaq. Let's first talk about the Nasdaq stock market. So the tech stocks get hit hard during the recent pullback, but that is actually create some opportunities. The AI bubble has deflated a little bit, which means the valuation for Nasdaq are starting to make sense again. So if we look at for our Nasdaq chart, you have seen it already recover most of the last week losses. It is now testing a key resistance level around 90,100. There is a fun factor you might need to know is that when Trump first announced his tariff plan last week, the market was actually going up at least in the first 15 minutes, when he only talked about the 10% like basic tariff, it wasn't until he started talking about the extreme reciprocal tariff that things turned south. So now, for that reason, as long as no new tariff surprise comes out again, we think the Nasdaq will continue climbing, and our target for the next month is between 20,500 to 21,000. And of course, we will keep a close eye on the headlines, but more overly, we stay bullish on US tech market.
All right, Peter, you mentioned the currencies there, particularly at the movement of the yen. What are you seeing?
So for the yen, we are mostly watching the pair of Aussie yen, because those two currency is strongly correlated to the US stock market. The Aussie tends to rise when stock market rising, and the yen is just the opposite. So the Aussie yen pair basically moves exactly the same as the global economy market. So if I'm bullish on the stock market, so the same trend will be happened for the Aussie yen too. We think this pair could rise in the next few weeks, possibly revisiting the April 3rd high, like near 95. And our strategy is to look for buy opportunity near 90 or waiting for a breakthrough above the 92. It is all worth noting that this move isn't really about rate cutting in Australia or rate hiking in Japan. It is almost entirely about the stock market, about fear in the market has going down.
Now, Peter, the prospects of a global recession reflected what we're seeing in commodity prices, particularly copper, given it is seen as the barometer. What are you seeing?
So commodity has a rough time lately, not just because of the tariff last week, but also because the investors started worry about a potential recession. So copper is a very good example. It gets hit hard, not begin last week, but begin from the US auto tariff. But now there is some of those fear has like easing. So we are looking for all the commodity price, including the gold, including the oil, including the copper price, will seem a short-term rally. But I won't bet on a long-term breakout because there is still a fear of recession there. It is not like the US stock market. For US stock market, I will keep long it, but for commodity price, I will shortly long it. So if the copper price can break through 9,000, I will look forward to see it comes back to 9,300, but that's it. That is a strong resistance there. I don't think in short term it will break through this resistance. So only short term long. Yeah.
Peter, almost out of time. Let's take a quick look at gold then, given it has been the safe haven trade, of course. What are you seeing, particularly in light of what we just heard over the past few hours?
Yeah, so gold is a little bit tricky because on one side, it is benefit from the commodity price goes up, especially in recently price movement. We have seen a more close correlated to commodity side than to bond side. But at the same time, because the fear is slowed down, the pressure is relieved. There is also some pressure on gold price. So combine both two, I think the gold price will have limited upside right now. It is more likely to move sideways or drift lower a little bit. So I'm looking forward to short it around 3,100 level, but it will be like a very short term, very fluctuating market. I will get the support level at like 3,050 and 3,000 level.
Peter, thanks so much for joining us from ACY Securities.
Thank you.
And that is The Trade.
The trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.